Now I'm talking about the different types of loans, where there are several types of loans. Most fall into two categories: secured and unsecured loan. An example of a secured loan is a mortgage or a car loan. These loans are secured because they are backed by a collateral, an asset you agree to give the lender if you are unable to pay back the loan. In the case of a car loan, the car itself serves as a collateral. The lender can repose the vehicle if you stop making payments on the loan. You will receive an interest rate based on your credit history, the type of loans you are applying for and the asset you are securing. Loan terms for secured loans are often more favorable because your lender has the security of asset you are purchasing. It will be getting something of value if you are unable to make payments. You will receive an interest rate based and interest rate based on your credit history, the type of loan on your credit history, the types of loan you are applying for and the asset you are securing. You are applying for and the asset you are securing. The other type is that an unsecured loan is one that a lender extends to you without an asset to secure it. Examples of unsecured loans include student loans and some personal loans. Your lender will qualify you for an unsecured loan based on your credit. With a secured loan, if you are default on your mortgage, for example, your lender can take possession of your home. With an unsecured loan, this is not the case. There is no collateral the lender receives if you don't pay the loan back. Unsecured loans tend to have higher interest rates and their amounts are often smaller because of this. If you fail to pay an unsecured loan, your lender will report this to the main credit bureaus and collection agencies in an attempt to cope up the money. Now, the thing is that how do you qualify for a loan? To obtain a loan, you will need to submit certain information about yourself to the lender via an application. The process of applying for a loan will look different depending on the type of loan you want. Unless you are borrowing from someone personally, almost all loans require a credit check, meaning your lender looks at your credit score and history to determine how risky you are to lend to and how likely you will be able to repay the loan. To obtain the loan, obtain a loan, you will need to submit certain information. You will need to submit certain information about yourself to the lender via an application. About yourself to the lender via an application. Your credit score says a lot about you. If you have a high score, it shows lenders that you are responsible with your debit and you make your payments on time. A low score could mean you have missed a lot of payments, you have made payments later, or you don't have a lot of credit history built up. In addition to your credit score, your lender will also need to verify your income. Your income will help determine if you can make your monthly installment payments or meet the terms of your loan.